Good morning, everyone. Welcome to the metal markets. I'm Market Stalker D, and yes, I'm in a long copper trade, fading the move, of course. What else would I be doing? Let's start the stream by reviewing what the bots did last night. So I've got the old contract because gold is in rollover, and overnight I do have some bots that run gold trades. Now, last night the volume was still kind of split, so I left it on the August contract, and it did get the breakout of the pre-Tokyo range, and eventually I do think that it took it as a time-based trade. Maybe it could have been a full 2-hour multiples that I shoot for. But yeah, if I use the Blahtech backtest mode, so here is the pre-Tokyo range. Let's put a little rectangle there. It's close enough. It breaks it with quite some volume. That usually means institutional footprint. Again, not odd because it's rollover, so they have to get out of some positions. And then it just carried on, like it literally never even looked back. So it was a very drama-free trade. And just as we got to my sort of 4:15 a.m. time, the bot took profits. And that was it. So very, very drama-free. Very mechanical trade. It is a pre-Tokyo breakout with volume, with a volume filter. And depending on what happens with that volume, it will either be a fade of the pre-Tokyo range or a proper break. So that is the only difference, but the reference for both of those strategies are the same. Since then, I haven't done much. I've just been observing and actually doing other things for another little project that we just started. And now, because we rolled into December contract, we really need to see what the December contract wants to do here. There it is. Slightly different levels. So what do we have here? We have 4100 as the biggest mega call wall in the nearest vicinity. At the moment we are struggling from 4080 put wall, and the put wall at 4080 is a little bit weaker, but it does have some implied volatility that is interesting to me. Further down we have the gamma flip at 4020. We're above that right now, which means this entire structure on gold is now positive gamma environment. What the hell does that mean, D? It means that we expect more mean reverting price action. Does that apply to a 30-second chart? No, but does it apply to intra-session overview? Absolutely. So that means when you have positive gamma, if you're on my Market Stalkers Pro development course, you will know about the Tom and Jerry chase and the Frankie fake out and stuff. So those sorts of conditions, day range fill, Frankie fake out, Tom and Jerry chase, that is all higher probability when you're in positive gamma state. If you're in negative gamma, you could argue that prices are just kind of screaming in one direction, and then no levels are going to be respected. So we don't have that in metals today yet. Okay, it could change, right? It's not like set in stone or anything. Markets are very fluid, and yes, these conditions can change sometimes. But right now, whilst gold is deciding whatever it wants to do, I actually went into a long copper. Why? Because whilst gold has been bleeding lower, copper is kind of resistant to that. So anytime gold goes lower, copper sort of reacts a little bit, but then stabilizes itself. And it seems to be one of those days where copper is more reactive to the upside of gold movement than anything else. So that's kind of what I'm doing here. And also, if you read my article in the blog about how copper normally behaves, whilst gold has statistically more trending type moves. Gold, copper on it's the extreme opposite of that, is more an instrument you want to fade upon any kind of pops outside of the initial balance or extended moves that you see, because it tends to fade the movement more often than not. So that's what I'm attempting here with this particular trade. Now this trade is quadrupled up across 4 of my accounts, so we'll see where we can get to at some point. The whole setup, the whole playbook on copper, let's make this bigger so that I can show you what I'm looking at, is banking on a mean reversion to COMEX value from yesterday, where we also have the statistical exhaustion of the average range, but we also have this 4-week point of control that is kind of an eyesore to me. So that can be a magnet, and that's what I would like to get at some point. But you can see that my target is actually just 2 to 1. If we get that, we get that. If we don't, we don't. We will manage it as and when required. If we manage it at all, a lot of the times I just let the market do whatever it's going to do, because the risk is defined. You know, if you are risking something per position up to your eyeballs, you will be trembling with every loss, and then every loss seems like you're getting further away from some arbitrary goals that you set to yourself. But just know that when you are properly positioned, any kind of loss, yeah, it's not pleasant, right? It's not pleasant, but you should be able to absorb it. It's like, okay, ouch, right? But not like sort of smashing you into the ground, like just completely annihilating you. And if that's what you're feeling, then it means that you're trading with way too much size. And actually, we have Coach Ray here every so often in chat. He has a great saying that if you can't walk away from a desk as soon as you enter a position, you're probably too oversized. Now, I will mention that recently I've seen people on the opposite side of the spectrum where they're not risking enough. So they're risking peanuts. They're risking like $50 or something on a trade, and it's like, well, what are you trying to achieve there? Are you trading like an account with $500 drawdown? If yes, then you know that's all right. But if you've just started a new evaluation or you started a new account, just stick to some normal position sizing, unless you do 1 million trades per day. So again, every single approach has its own quirk. The more trades per day you take, the less position size you should be in with, and vice versa. And I see the opposite all the time. I see scalpers who are going in with like 5 NQs, minis, and they're like, oh, I can never make it last. Yeah, because generally they have a negative risk reward. So that one loss that they get on a 5 mini NQ, it hurts, and it generally means a blown account. But there are people who are on the opposite side of that. So I'm of the camp that if you're going to trade once a day, you can actually have a larger position size, not the opposite way around. Okay, the more times you enter a trade in a day, the more exposure you have. Does that make sense? So if you enter 100 trades a day, you're this is going to sound weird, exposing yourself to the risk, right? Not physically, but risk, risk-wise, to, for somebody to come and catch you out and take everything away. But if you're somebody who has exposure through time over size, you can actually go a little bit harder on the positioning. That's just the way I've always done things. And if I'm going to do 3 trades per day, yeah, I'm going to trade a mini, but if I plan to trade 10, 15, 20 trades that day, I'm going to size down, because for the trades that do hurt and for the trades that I do lose, I don't want them to hurt too much. So you have to find yourself. There's a million ways to play this game. There's no right or wrong. Everyone's different. I'm super comfortable with my medium accuracy, medium size of risk rewards. Some people are very uncomfortable holding trades for many hours. I'm not. I actually feel very comfortable. So, yeah. Calvin is here, Raphael, John Jones, oh my god, all the names, Tony Gold, Mark Henry, Initial Maverick, I'm Ava Earring. Alright, so we have some familiar faces in here, or names, I should say. What is Bookmap doing on copper? Let's see. So I'm gonna split the screen now back to gold and copper. I'm also watching crude oil, nothing there. It's kind of failing the auction, I suppose, but that initial balance size versus the ATR that we have, that's kind of bothering me. Because the ATR is almost 70 ticks, but the entire initial balance is 90 ticks. That's not that great. Right. I'm just going to read the hypotheses from one of my gold members. Okay. Essay short in the form of wave. Yeah, I think that's in progress actually. Longs from the lows of sweep and return to failed auction. I mean, those two are a little bit conflicting. So let me, is Trump talking today? Is he talking today again? And I know I've been a little bit random with the timings of the streams because, and I'll be honest with you guys, I'm thinking I should take an annual leave or something, or at least focus on the other thing we've been doing in August, because I don't really want to sit here and spend the entire August watching paint dry in case things kind of go a little bit quiet. And I'm not somebody who takes vacations, but I would like a staycation. That would be nice. There's been a lot of work that's been going on this year. So let's see. It was great. Okay. Right, let's see who else is in here. Cave Manning says, good morning, I have a question about my algo research. I've only been able to get 3 sleeves that pass my gauntlet of on 16 years of data. What time frame are you using? Okay, well that's the first problem. The most amount of sample size that I'm using is 18 months. You can't run the same strategy over a 16-year sample size. We're talking incredibly different market conditions, right? You have different interest rates, you have different geopolitical risks back then, back now. And even though some of the strategies will work, they have to be slightly modified in terms of stop loss size, targets, maybe timings as well. So that's your first mistake. You do not run a strategy on a 16-year sample size. That's crazy. Start with something for 3 months, then see if it survives 6 months, then see if it survives a year, And really 18 months is the longest you should be running any kind of a back test, just to kind of test the functionality of the setup. If it doesn't even pass that, I would look for a different strategy. I typically run most of my algos either on a 2 or a 5 minute time frame, but it depends what they are, of course. None of my algos have trend following. They're all mean reversion type algos, apart from the breakout for Asia, which is like a very typical thing that happens during Asia, and it's a hallmark of Asia, especially Tokyo. And that has volume filters. So I'm not even really using too many levels, I suppose. I use a range, use a break of the range, so not any single level, no moving average crossovers. And then, you know, the question is, how many conditions do you have in there? Because I typically try never to go over 4 conditions, and one of those is time. So the other 3 might be volume, break of a level, or some kind of a price action that I want to see at that point, that I've defined pretty strictly. But yeah, so start with smaller sample size to find whether something has an edge right now, then see if you can expand that. Don't just jump to a 16-year. You know, I train my algorithms every 3 months or so. I will look at how they performed and whether I maybe need to tweak the stop loss size, and that is purely a human in the loop. That is nothing to do with the backtest. It's everything to do with my experience of what usually works in this sort of volatility regime when C-vols are at a particular number. So that's, I kind of do things the opposite way. You know, everybody thinks that you should start from a huge sample size. No, you start from something that you've observed has been working right now. And then you see how long you can ride that strategy. But it also depends on the strategy. If you're purely doing something that is trend following, you then need a trending type market. So obviously summertime probably not the best time of the year to be doing that. And again, I've mentioned before, I have about 7 algorithms. It's not just one, and I tend to kind of switch them on and off depending again on the volatility regime. So there's like many little finer points that, and listen, I understand when you're struggling to make algorithms work, because that was me about 11 years ago. Because 11 years ago in 2015, that was when I first started messing around with algorithms. And I thought, we're going to smash it. I'm just going to throw a bunch of money in it. We're going to spend some time, and I'm going to have a D-bot. Yeah. If only, right? So we spent 2 years trying to make something. It failed miserably. So I lost 2 years of my life doing it the wrong way, right? Because I was like, I'm going to have, you know, all of the conditions, supply and demand, and market profile, and statistical averages, and time of day, and also price action, and then it never traded. So I was like, well, what's wrong? I can see the setup there. Why isn't it entering? And then the bot would be like, well, because X, Y, and Z, and I'm seeing this, and I'm seeing that, and then I'm clashing, and I don't know which signal to take. So I was like, okay, so that's not the way to make algorithms. Let me go and read some books, take some courses, and then we'll be back. And look, it took me a long time, right? It probably took me another 2 years after that to actually make something work. I'm streaming. Goodbye. Yes. Yeah, I know, yeah. The husband almost walked in half naked into the stream. Oh god, it's funny. See, you can't knock. Like, usually when the door is closed, he should know that I'm streaming, because I never have my door closed. It's like, what's he doing? But yeah, that could have been interesting. Yeah. Education and a show, you know? Of course. Bertie Ani says hello. Hello, hello. Very good to see you. Technical G4 says, so you think sizing up can be the downfall to traders? Oh, 100%, man. I've seen people who never survive going from like 1 to 2 minis. Nowadays we have micros, but back in the day, there were many, many people who just did not survive. Okay, we're getting closer to my target here. And then closer to the target. Clip some off here. Clip. Sorry, where were we? I'm just taking things off. Okay. Right, slowly catching monkey. We are almost 6.5 grand, but we'll see. It's not done yet, right? Until it's actually booked, I can't call any of this mine. Yeah, so sizing up brings a couple of problems into the mix. First one is that when you are doubling up on the position, which is what we had to do back in the day. Now you don't have to do it. You can drop down to micros and you can kind of push it 1 micro at a time. But back in the day, you had to go from 1 mini to 2 minis. There was no micros. And what used to happen, people would painstakingly develop, you know, a profit curve over 3-4 months, and then they would double up. So what happens with the profits if you run into a drawdown? It cuts down the time that you can chew into it because of the doubling of the position size, because it's 100% increase in the position size, right? You know what? So let me just see the balances here, and then I'm gonna start scaling out. Right, so yeah, let's take this one. And yeah, we're doing more base hit days because of the time of the year. Okay, so that one is done as well. You know what? Let's close this one out too. This one. One, two. And that one. Okay, so now I have 2 left. And those 2 got a worse fill. So let's open a stream view here so you don't get cluttered up with a whole bunch of accounts. So that's what we're working with. So we booked 6.2K. We'll see what else is going to happen. Yeah, so sizing up is a big deal when it comes to people who have never gone through sizing up before, because it literally means that whatever you've done, unless you have like a big fat padded amount of cash in there, your profits are going to dwindle in like double the amount of time, and that freaks everybody out. On top of that, you also have a problem where when you start to trade with more size, some people actually have this mental adjustment that has to happen, because suddenly they're seeing, instead of, let's say, $12 per tick, suddenly they're seeing $25 a tick, and that freaks them out. So it's like suddenly you're going up 300-400 up and down, and it does something to people. So sizing up is it's a very dangerous part of anybody's journey. And yet what we see now is that people just size up willy-nilly. Like when I started in prop, you had to have a position size that was your core position size. So if your position size was 1 mini, you couldn't just go and trade 3 on the day because you felt like it, or because you're, you know, in a drawdown and you're trying to add more. That was just terrible. So today, what I'm seeing is that people don't have the position size as a part of their hardcore plan. It's like mutable to them, right? It's like, oh yeah, today I'm going to do, and then they kind of go, oh, today I'm going to trade 3 minis. And then tomorrow, or even in the same day, they go, well, I lost the first two, so now I'm in a hole. So now I'm going to drop down to like 3 micros. I'm like, what kind of a position sizing is that? Like, that's just like so random, right? So the less random you can be with your position sizing, the better your P&L curve will look. Now, there are levels to that as well. So if you are an experienced trader and if you know that something has worked for you over and over, like for me, it would be something like average session range high, exhaustion from the value area low. Like for example, if we ever get up there at 638 and I still have time in the day to execute a trade, that's kind of my ultimate sort of star setup, right? As S&B guys say. But most people don't recognize that. So if I see that, and if the time of day is correct for that sort of a setup, I will go in with more size, but not like 3 times more, 300% more. I will go in with maybe a third more, right? So if I'm trading, I don't know, let's say 3 micros, maybe I'll execute 4 or 5, right? But it's not going to be, you know, suddenly me going from 3 micros to 15 micros. That's just insane. Because there's too much variance, you know. In this line of work, variance is everything. So if you have, like, one of the reasons why a lot of risk managers like the way I trade and why I inadvertently always end up in live accounts is because they like the low variance that I have over time. It's the only reason. You know, I'm not the best trader in the world, far from it. I'm decent and I make a lot of cash, but, you know, when it comes to accuracy, there are people who are more accurate, but then I don't care about accuracy at all. I care what happens to the trade in general. How much drawdown a trade suffers, it's really completely irrelevant to me, and it doesn't irk me emotionally in any shape or form. So, you know, it's down to a certain level of maturity, your experience. But if you don't have any of that, I would just stick to a core position size. And then I actually have a course that is, it's kind of like a mini course, but I've now put it as a part of the PDP, Pro Development Program. It's the Funded Trader Blueprint. And in there, I do talk about the amounts that you should have before you even try to size up, and what will be like a safer time to do so, and how to do it, like how much size to add and stuff like that. But, you know, again, everyone is different. In my methodology, I assume that people who are coming to me for the Funded Trader Blueprint, that they're coming to me from my methods. So I kind of teach from that point of view, if that makes sense. Cave Manning says, says, thank you. Yes, I can build a good one for 18 months, but my AI tells me it's a bad idea. And it was my belief that the market changes. Thank you for confirming this. Yeah, don't believe anything AI tells you. From what I've seen, like, AI is great to run a backtest, but do not let it say stupid shit to you because it hallucinates a lot. Like, for example, this is what it told me when I started using AI in my workflows. So right now I use Cursor, and Fable has been better, but again, this Opus, next Opus is probably just as good as Fable, so we're looking forward to that. However, what I use it for, I don't use it for it telling me whether a strategy is good or not. That's my job. It's not its job, right? So what I use it for is for pure functionality backtests. And I actually have a memory file, I have an MD file, where I told it not to hallucinate and make shit up. And it literally came back with, okay, I'm so sorry, I did it again. And I said, yes, oops, you did it again. What are we, Britney Spears? And it said, I remember this, like, going forward. And I said, yeah, put it in an MD file, because it's getting fucking annoying. Why? Because every time we're working, you're making stuff up. So this is what it said to me. I was doing a backtest on gold. I was actually exploring bounces from VWAP as a potential strategy. To me, it's not viable as a mechanical trading system. It just isn't. And then it goes, Oh, you're trying to create something during Asia. Well, Asia is actually very low liquidity compared to COMEX, and it doesn't move. And I'm like, what are you talking about? Like, are you just like dumb? Do you not have the CSV file that I gave you with the tick data? Okay, why don't you go, instead of making shit up, why don't you go and have a look? Like, I argue with my AI a lot. I said, why don't you go and have a look of how volume and trends work during Asia compared to COMEX? Okay? Go and have a look. Continuous chart, right? And it comes back and goes, oh, wow, I had no idea. Yes, my assumption was completely wrong. And I'm like, yeah, because you're using generic fucking data that you pulled out of your ass or something, if you even have an ass. Because you're an AI, so you probably wouldn't, right? and from that point on, I just didn't trust anything it says to me. So do not let AI tell you whether the strategy is good or not, and whether you should be making a backtest for an 18-month thing. So 16 years is definitely a bad move, because it's a very, very different market. I mean, hell, even in the last 7-8 months, this Iran-USA war is a very different market from last year and Trump tariffs. Volatile, but for a different reason, right? So you have to be aware of all of that. And AI, I'm sorry, it just isn't. And it hallucinates a lot. So be very, very careful taking on advice on what sort of strategies should be looking like and what volume is doing during which session. That's for you to decide, not for AI, because it doesn't know things. Just like with any other thing in AI, AI is only as good as the model you feed it. So if you haven't fed it any models, it's going to make stuff up. It's going to take some generic pieces on the internet, and sometimes it doesn't even do that. Sometimes it just extrapolates, I don't know from where, but it just literally spews out complete nonsense. And I'm like, well, that's just not true. And this is in particular the case with like some marketing stuff. For example, you have, like, I do a lot of websites and whatever, and yes, I do use AI to help me. However, I'm very aware of like what services I'm supposed to be using, because I've built websites since 1997. It's just now, it's just about the workflow, right? Everything's faster. And what I typically do, I connect them all up to something like Cloudflare, and you know, you can upload everything like in the split of a second. So what it does is it imagines how the marketing of stuff should be, and then completely misses the mark. Absolutely completely. Like whenever I'm trying to come up with a blog post or something, I don't ask it anymore, but initially I was like, let me see if it can actually help me find ideas. So I'm like, can you tell me if there's anything you can talk about, that I can talk about as a valuable piece of information that is unexplored? And then it goes, oh, stocks. And I'm like, slow clap, mate. Like, oh, wow. Like, I couldn't really imagine the worst thing to talk about. And I said, first of all, stocks, very competitive market. You have millions of websites that are talking about it. So you tell me, would it be easy to rank for any of that? Second of all, knowing all the work that we've done together, little AI minion, do you think that I should be talking about stocks, or that I should be talking about what I know, like metals, energies, you know? And he goes, oh, I'm so sorry. And I said, yeah, you're absolutely right, because it's a very high competition. And I'm like, yeah, so we're going to leave SEO to D, because you obviously don't have a clue what the hell you're talking about. So yeah, very, very funny. Dan M is very right. He says, to me, AI seems to hallucinate more the larger the context window becomes. Way before. Yeah, I find that it starts to hallucinate around 80%. And you tell me whether you find the same. 80%, 78 is just about okay. 80%, it just starts making shit up. And it's like, just stop. Just don't do it. Yeah, so Technical G4 says that's been the biggest problem for me. I recently did a 2 combine experiment, I suppose, where I sized up in one where maximum I got in was 2 contracts on M&Q. I blew the other one while I was sizing up and got funded the other. What does that tell you? So first of all, I'm of the opinion that any valuations that we have on the market now, even the biggest ones, they're just not big enough for you to start sizing up willy-nilly. Anything larger than 1 is like the only time I even attempt a 2 lot is if I have, and this will never happen now because it's just not that kind of a prop world anymore, is if I had 40,000 of an actual buffer, actual money in the account. Before then, you're really playing with fire. You know, I see people trying to trade 2 minis on a 5 grand drawdown or 5 grand buffer. It's like, do you know how much damage you can do on 2 NQs? Or, you know, even like 7 micros? 5 grand goes nowhere. It's like, poof, gone. And people are like, well, what do you mean? But it's not that much size. Oh, it's a lot of size. It's a lot of size. Why? Because you have a market that moves a lot. So NQ, M&Q, it still moves a hell of a number of ticks in a day. And the gold is similar, right? So I haven't touched GC gold. I've been on all of these accounts, I've been trading MGC 3. That's it, 3 MGCs. And copper I've been trading bigger. Why? Because A, there's no micros on most of these props that I'm with right now, and B, it only moves 220 ticks in a day. So that's your max risk, right? If you were, so this is something called value at risk. I made a video about this years ago. It is on my YouTube channel if you go back. I'm in, I think I'm wearing the same glasses as these, but I'm in my old house, right? So, and I talk about value at risk, how you would measure whether you're sized up, oversized, effectively. And the way you do that is by taking the stance of the worst day that we've had in the last, let's say, 3 months. What was the worst day or the best day? The biggest day? Was it 5%? Was it 7%? Was it 12%, which was the case with metals this year? So what would be your value at risk? If you assume that you're an investor who opened up a position, a brand new position, on the day of the biggest day, whatever that day was, what would have been your biggest drawdown on just one single position, whether it's a micro or mini, that depends on what you're aiming to measure. But let's just say 1 micro. And last time I looked at NQ, you would have needed $3,600 just on 1 micro to be able to absorb that kind of a day. And I think on metals it's even worse, because at one point they had like 3,000 tick moves in a single day. So that would be terrible, right? That would be a lot of risk to absorb. So if you look at your positioning and your padding of the account and when you should be sizing up, it should be double the amount of that money. So if it's like 3.6K on 1 micro to survive the biggest day, then you shouldn't really be going to 2 micros until you have double amount of that, right? That is how hedge funds and serious institutions look at their risk. It is called value at risk, VAR. Not a very well-known concept, right? Nobody talks about it. Certainly not the guru sort of style influences. They would be like, yeah, man, new combine, yeah. Okay, great. Yeah, let's go, let's send it for like 15 contracts, mate. It's like, yeah, send it straight to oblivion. But hey, it's great for affiliate cash, right? Will be. Ooh, getting a bit jumpy. What is this? What is this? Thronestone says, love you, D. What's on your watch list? It's always MGC and copper most of the time. I still have a couple of positions in copper. going. But I'm looking for something else. We're coming into the Euro close. I was gonna try to look for something in crude, but oh my god, crude is like so flat. As I used to say, flatter than Kate Moss's chest. Do you remember Kate Moss? Maybe I'm dating myself a bit. The only thing flatter than her chest is her voice. So, if you ever heard her sing, you will know. It's actually a joke by one of the comedians that there was on one of those like panel shows, like there's one with Stephen Fry and stuff. It's something that I like to watch. You know, nerds will be nerds. So there you are. Yeah, so I don't know whether crude oil is going to offer me an opportunity. It's kind of underneath value, I suppose. Gold until it gets to this 4100 and VWAP. I do not want to do anything with it. Let's see. This is how you know that when you're getting collaboration opportunities that they have not watched your channel. Because here's one. Hello, my name is so-and-so. I'm the influencer manager at some blah AI company. It's an AI-powered trading platform that empowers traders to make smarter, faster, and more informed decisions through advanced market and macro analysis, AI-driven insights, and intelligent automation. Yeah, join the club, mate. Like, the only people that I would support there would be like Trend Spider. And then he goes on. We've been following your YouTube channel, Market Stalkers, and genuinely enjoy the valuable content you create. And you think, all right, okay, they've watched it. Your in-depth crypto market analysis. I've never done a crypto market analysis. I think I've done one video like 8 years ago. And it's like, delete. That's how I deal with those. So I'm so picky with who I'm going to work with. It's not like just get out of here, mate. Like, why do they lie? It's like you can't start a relationship with someone just by lying. Ray, it's there. Yeah, there we go. I was mentioning you, Ray, just a minute ago. I said we were talking about positioning. Don't know whether you were here, but I said you have a saying that if you put on a position and you can't walk away from your desk, you're probably too oversized. And that's the best way, the most realistic best way that you can figure out whether you're in with the right amount of size. It's brilliant. Very inspired. Stockdown says, hey D, why your charts always look so messy? My charts look very clean, mate, but maybe you should go to Specsavers or something, because each part of my chart does one thing. So, if you think this is messy, I have Asia high, Asia low. I also have the profile. I have overall profile, which is 4 weeks worth. I have the value areas, and I have exhaustion points. What exactly are you finding messy here? Is it not messier when you see some bullshit ICT people who have a million lines with like CB and BB and what I'd say SMT, SSMT, FVGs all over the fucking place? It's like, I have nothing. I have nothing, nothing. If I don't have you. Anyways, what do you find messy about this? Because I've got 5 lines on the chart, but each of those 5 lines has a row. So if you think this is messy, please fuck off of my channel. What do your charts look like? Are you like, you have nothing on it and your P&L is probably reflective of the tools that you're using? Yeah, I haven't really slept well recently, so when I get like that, I get very snarky. So yeah, no sympathy there. They're my charts, right? And if you find them messy, that's your problem. Let's leave it at that. Dan, CB babies, Bobby, boo. Yeah, IFVG. Yeah, that's right. Bertie trades as I have no idea how people trade with just candles. You know what? I can understand how they do it, like people like Aaron, for example. But then again, he trades one or two things and he looks at one strategy, which is not necessarily a bad thing. It's just for me over the years, and I have been doing this for over 20 years at this point, I found that situational awareness needs a little bit more. So if you want to figure out the market and this is my superpower, I can figure out the day in any situation, any market, as long as there is enough, just about enough movement. And that's what all the lines do, right? So it's not, oh, D, we're doing messy charts. It's like I literally have gamma levels, I have profiles, statistical averages, and Asia high, Asia low. The end. The end. So what's messy about this? Like, I don't... Is this really the messiest chart that you've ever seen? Like, what are we talking about? Because I've seen, you know, if you've watched Tops of TV, there's Mandy with her spaghetti. Like, to me, that's very messy. But it works for her. So it's like, who am I to argue with that? No one, right? If it works for someone, it's not your job to go on somebody else's stream and go, I don't like your charts. It's like, watch your own fucking charts, mate. Yeah? He says you need highs and lows or else it's like, yeah, you definitely need highs and lows. Yeah. That's kind of the basics. Even if you don't use all the stuff that I use, you still need some sort of structure, right? So even if you put a couple lines there, that's you know, something pretty decent. Now, I have multi-time frame supply and demand zones. So for example, I'm on a 30-minute time frame, but if I want to see where we came from the daily chart, I can just press number 3 and I can see that we have actually missed this demand zone that we hit on 19th of July this time around. So is that strength? It could be strength. You know, we've been staying away from some bigger levels in copper, and that could be a sign of strength, at least, you know, the way the very massive time frames look like today. So today we narrowly missed it. Why? Because there was a level at 630. And what's 630? It is a weak put wall, but it had some anomalies with it. Oh, but gamma exposure. I don't know what that is. Oh. Yeah. Enough about that. Right, is there anything else happening here today? Crude oil has woken up a bit. So what I'm going to do, I'm going to switch on one of my exhaustion bots and see where we are. So, not going to switch on all of it, but let's do 85,610. Because at this point, since I've made some cash on the day, there's no point giving too much back. So I'm just, and because I don't necessarily copy trade across all of them, I always pick and choose which accounts I'm gonna trade. And I need output as well, so I can see what the hell's going on. Ray says, in a short, good old days, nice break of initial bounce low. Yeah. John Stone says, hey, D, have you ever used a TDI indicator in the past? I have not. I don't really use indicators of that sort. I just use the situational awareness tools, you know. So because of that, you won't find me constantly looking for new indicators. In fact, I haven't looked at new indicators for like 12 years, you know. And furthermore, I'm not really much of a momentum trader necessarily, right? So I'm more in the camp of mean reversion traders. And even though I will do a trending trade, it's usually on some sort of a pullback. So that's why, you know, I'm familiar with a lot of indicators because obviously I follow everything that people are using. I have to as a coach. But when it comes down to me actually testing something new, especially if it's like momentum based, first of all, to me, it's lagging. Second of all, I can see on the order flow much faster whether any volume or delta divergences are coming in before any of those indicators show anything, right? So remember, I'm an order flow trader, and I always have this little tool in the other part of the screen that is usually away from. So right now you see on gold, a whole bunch of things popped off in August contract, but let's see what's going on in the December contracts because we rolled, and I did not roll my bookmap yet because I haven't traded gold myself. The bot traded it, I didn't. And I'm gonna unsubscribe from this and wait until it loads, right? So we'll see what they do there. So once it populates, we're gonna have a little bit more of an idea. Crude oil is tagging average session range low now. We've gone below the put wall. Is this news? Because obviously I'm doing a million things here. And Ray, is this news? Will you be my eyes and ears on the juice? Speaking of juice, I've gone off the nicotine. These are 0%. So I effectively stopped vaping, but I'm still vaping because I find it, I don't know, relaxing. It's weird. And then I'll stop that at some point. But since I can't drink, I can't smoke, I can't do anything anymore. Yeah. All right. Okay. So are they going to kick off something? Because we've got volume here, and typically all right, I'm going to flatten the other two positions. And we've got 7 minutes until the London close. Still says unrealized. What am I in on? Ooh, yes, there it is. Okay. So currently sitting at 6.3K on the day. So we'll see whether we can find, again, white charts, freaking people out. But yes, I'm a psychopath, whatever. We'll see whether we can get some kind of a bot trade here, maybe. Ultimate, not bot. And that will be 610, I believe. So let's pick that one. Maybe it's not far enough from IB. I don't know. This one plays on the bigger extension of initial balance and then tries to fade it when volume shows exhaustion. Well, we shall see. Stock down 7. You are being a bit annoying. Who the fuck are you anyways? I've never seen you here. It's certainly not one of mine. Because, you know, there are trolls that I know by name. And you're being a troll. And all of your comments are just making you look very petty and like you're a very little man. Don't do that. It's ugly. Oh, you're not trolling. So first you're criticizing my charts. Now you're saying that vaping makes you crash out. What does that mean? Like, I don't even know what that means. It just sounds like you're trying to like start something. I don't know. It's just like, how would vaping make you crash out? Does it make you crash out? Is that what you meant? Like, please clarify. Like, so many questions. Why are my candles distracted inside the volume profile? Because I like to look at the candles and the profile. So I was never happy only looking at the profile, even though with our indicator you have the ability to hide the candles completely. In fact, you could just have that. You can even have letters, right? But I don't like looking at pure letters. I'm a very visual person. So I prefer to have an overlay of candles because that's just how I was taught. And when I still had the T4 platform and some of the other ones, the profile was always in a different window. And it used to annoy the fuck out of me because I used to have to like look at a candlestick chart, then look it over here, look at it. And it's just the way my brain processes things. I have to have it smushed together. So again, it's a personal preference, right? It's not, there's no right or wrong. If you don't like that look, you can absolutely go to just the letters, right? So if you go to charts, you can have just the letters, okay? This is more your traditional sort of volume profile or TPO profile, right? So this is what you would see on a lot of the indicators. But to me, I'm not seeing anything. I can see the shape of the profile, but I actually do want to see what the candles have done. Do they have wicks? How big are the wicks? Like I can see a little bit of excess here, but to me, this is just not enough resolution. It provides me with good situational awareness that we're having, you know, a day where we are building structure effectively, but so it's not the biggest day. But for me, this holds so much more information. And, you know, if that's not the case for you, that's absolutely fine. I mean, everybody's different. So it's just, I'm known for my graphic overlays, and a lot of people like them. If you don't, it's absolutely fine, mate. Okay, how many people here find my charts messy? Go on. Because nobody ever has said to me that my charts are messy. You are actually the first person since I've been on YouTube, which is since 2015, who told me that my charts are messy. So let's hear it in the chat. Oh my god, AK Wolf. Are you the same guy from season 2, I want to say, VIP? Are you the same guy? Good to see you still trading. Because I remember you were trying to work things out. Yeah. All right, so Initial Mavericks, cleaner than mine. Dan Trader, not at all. Good MGI. Ani says, yes, very messy. Lol, joking. I focus, I like your charts. I like your charts. So, yeah, again, nobody has ever told me that my charts are messy because of that. But yeah, there's always someone who's not going to like it, and you don't have to like it. So, yeah. Yes, AK Wolf. Amazing. Amazing, man. So AK Wolf was a part of the VIP program in Top Step, and he was one of my VIPs. And at the time, he was still new-ish to trading, and he was trying to, you know, work out the strategy and stuff and everything. How are you? How's it going? Catch us up, mate. Like I love seeing people that I've come across before and that I've coached before. They just gotta pop in and they're like, hey, yeah. And the biggest thing that I love seeing is that they're still trading and they haven't given up. They're still, you know, pushing, making sure that they're tweaking things, journaling, doing stuff. Right, what's the bot saying? Do we have anything happening? iFocus says, I appreciate your insight into the markets. You're very welcome. Thank you, thank you. Did I just lose the output? I did, didn't I? Because I thought I had the output, but clearly not. All right, that was the London close. If you were wondering what that jumbled mess of price action happening was, well, that's what it was. Whoa, whoa, whoa. Crude oil, crude oil. Let's see. Is it maybe MCL or something? I don't know. But yeah, so crude oil is now in a neutral day. However, we would be going against the sentiment on the day. I prefer to do the neutral day fades when we're opening inside value. Maybe we can do a little MGC short if it starts to rise up. It's just kind of flipped into negative gamma, this VWAP, and we've hit 4100. Yeah, let's try 610. And we're gonna do, oh, God, that's a lot of risk. Let's just try this. There we go. But we're gonna tighten this. And because this is a neutral day, and we're just trying to get the middle of the range here, this is just going to be more of a scalp. Sometimes I do these when there's nothing else happening. And we're almost done with the first version of the position sync that we're trying to build. This volume on gold December is still very thin, very gappy. But we'll see if we can get something out of it. Yeah, there's a lot of transacting going on at 4100, so you could read that as an attempt at a hedge. Let's move to the 5-minute time frame. Make this bigger because I'm not interested in copper anymore, I don't think. Maybe a short at some point, but we'll see. Maybe go for a bigger rotation here. Purely because it's gold and it does like to have like extended wiggles. Yeah, very gappy. It's annoying. Because is it a full roll? I'm sure that the contract volume has gone into December, but like look at this dome. It's like run, 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 run. 2 contracts. Run, 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 run. 1 contract. Run, run, run. Where are you guys? Come on. Joe's asking me, have yours rolled to December contract? MGC, I think it's still on August, but the main one is rolled, and I don't like trading the micro in the old contract, so I just flip whenever the main contract flips, which is why I'm on December. like I would rather have lower liquidity and more movement in the front month than low liquidity and no movement in the back month, if that makes sense. All right, AK Wolf said, oh no, it wasn't me, it wasn't the program, I've watched you. Oh, okay, so you're a different AK Wolf. Oh yeah, no, hold on. Yeah, you're a different AK Wolf, but I also had an AK Wolf in the VIP, so. Oh, that's a shame. All right. Am I still trading alive with that one prop firm or doing my own? I'm actually with 3 prop firms at the moment. I'm with Apex. I have moved away from the brick and mortar prop firms, if that's what you're asking. And I do have a couple of my accounts, but at the moment for the sake of, I suppose, approachability, I usually show my prop accounts here. So I have Tradeify accounts, Apex, and Trade Day. But Trade Day I only designated for Asia and bot trading, so. Because they don't, they still don't have, they didn't unlock full copper, so. Once they unlock it, I can maybe go back to trading that as well during normal regular trading hours. All right, so they're probably going to retest this area of 4100. See, this is why I hate gold. It's gotten into this like Nasdaq-y type behavior in the last year, especially. Because everybody's now trading gold because it went nuts, and now you have so many speculators that the price action has actually seeped into this retail sort of indecision, push pull, too many participants in one market. I prefer copper precisely because it's non-speculative, and whoever's trading copper has to be in it, right? Same thing with soybeans, where if you look at the price action in ags or in copper, you won't see shenanigans like these, right? It's just wagging all over the place. It's very decisive. It's just shooting in one direction. I'm actually waiting for copper to arrive into roughly this area. So we have POC there, we have the exhaustion of the session range, and we have volume low. Value low from yesterday, so that would be a perfect little trade. Right, let's see what crude oil does, because these two, gold and crude oil, are very correlated. How do I put the market profile in NinjaTrader? You buy Blahtech MP, which is one of our indicators, and then you put it in. All of this is my company, right? So every single indicator, apart from the ATR that you see on this chart, is Blahtech ecosystem. That's what I do, in case you didn't know. I actually, for a long time, moved away from just YouTube, and I went into being a fintech leader and basically running a startup company. So for a long time, we had some projects for other firms and banks and stuff, but now we are back to create indicators for retail customers. So that's what you're seeing here. It's underneath here. If you go to Blahtech website, and I'm pretty sure you actually have blahtech.co.uk. There you go. Blahtech for NinjaTrader is live. Me and the bots fully agree on one thing. Charts look better with these. So click on that, and that's where you can find the indicators that I have on my charts. Right, I'm going to move off the 5-minute chart because it's annoying the hell out of me. That was annoying. This is now a 15-minute time frame whilst we remain on a 30-minute profile. All right, so crude oil has tagged that average session range low, so we do need crude oil to stop freaking out to the downside in order for this one to work out in gold, so that we have neutral day fade from 4100 moderate put and VWAP. Doesn't mean it's going to work, it's all probabilities, but for now, that's the only thing I've got while I'm waiting for a better area to come in on copper. Crude oil, I've got nothing. I've got average session range low, but it's negative gamma, so it's like, 80 was smack down. It is Tuesday, and on Tuesdays, crude oil tends to go into more like trending type moves, so it's a bit tricky. Because I'm a mean reversion trader, and if you don't have a mean reversion, then you have to go into trending type strategies, and it's like, oh, no. I hate trending moves. I'm such a contrarian. How's my P&L doing today? It's doing pretty well. There you go. One short during Asia on MGC, and then some longs on copper. And now I'm trying to short neutral fade on gold. It's a scalpery scalp, but we'll see. If this 4100 doesn't work out, obviously it's going to go higher and it's going to reclaim VWAP and then maybe run out of steam somewhere, but I'm kind of banking on the fact that we haven't really gone anywhere. And being in with 3 MGCs and only an 160 stop loss, if I see something on Bookmap, I could add more, because the bots have to be very controlled, because they use larger stops. They use like 300 tick stops. But, you know, when I'm doing this sort of thing, working in a position, in a zone, that becomes possible. So it's not adding onto a position in a loss. It's this whole area here from the value high. Where's the rectangle? There it is. From the value high all the way really up until 105 is where I'm looking for shorts. So we'll see. We're nowhere near Asia high for a sweep. Asia high is all the way up there, so that's no help. So we'll see. And again, if we get smacked in the face, it's a tiny fraction of what we already have. We have a look at... Is this the premium version of NinjaTrader? No. Well, I mean, yeah, because it is like, what's the premium version of NinjaTrader? You mean the license, or the indicators are my indicators? There are indicators available for purchase. They're not. They don't come with NinjaTrader natively. If you buy like the lifetime license, which I do have, you're still not going to get Blahtech indicators with it, if that's what you're asking. So this is just NinjaTrader, but with Blahtech indicators on it, right? So if I go right click, and I show you what's on there, you see this folder, Blahtech? These are all the indicators that I have on there. So Blahtech MP, which is market profile, Blahtech gamma levels, Blahtech daily range, Blahtech candle timer, Blahtech better volumes, Blahtech supply and demand, Blahtech VWAP. And VWAP and candle timer are free, so. Are we gonna get single prints, or is this just a liquidity sweep and then they're gonna come back down? No one is selling here so far. Delta is still rising. That's not great for my position. Come on, 4100 giveaway. They hatched from it once, and now they kind of just disappeared. And they're like, no, actually, we don't care. We need someone with deeper pockets to step in. They're trying. Alright, bit of a shave off in Delta. Not too much, but just a little bit. It's not sustained yet. They've just kind of joined the party, but they still need to give way, so 4100 still needs to give way in order for this to work. If it doesn't, we just eat up a stop loss. About 375 bucks. Then we'll try again somewhere. The problem is crude oil is still... Was there news or something? Again, I kind of feel like this is a bit newsy. Was just curious about the volume profile within the free version of proper accounts to get access. So again, all of the stuff that you're seeing, this is overall volume profile from Blahtech MP, where it comes natively with Blahtech MP, but it doesn't come with anything that you might purchase from Prop or Ninja, okay? So again, I feel like I've answered that. What caused the all that? Yeah, Vital, I want to know that as well, because I feel like that's the thing that's putting a wrench in the works here. Let me have a look at Juice. Pause and airstrikes. No, you bastards. Is that it? Yeah. So yeah. So they're basically him and so Trump and Netanyahu are talking at the moment. I was not aware that that was happening, which is alright. See, I don't know about you guys, but I just gotten so sick and tired of following the news because it's all like he said, she said, he said, she said. And it's like, ugh, just like get on with it, you know? Okay, Puneet, if you're on here, I feel like you haven't rolled. Right, Copper is trying to reach this average session range and point of control. So we shall see whether I can actually get a position there. Right. So we're gonna leave gold alone. We're gonna wait for copper here. We're gonna move bookmap to copper. Can I elaborate on how I started with learning the volume profile and footprint and how you read it? I don't actually read footprint very well, primarily because it has a lot of numbers in it. Again, I'm a very visual type of a person, so this is the reason why I didn't really gel with time and sales, which is how I first started being taught order flow. My own journey started in 2013 when I wanted to switch from being a swing forex trader to being an intraday commodities trader. And to do that, I went to the prop hub of trading, which was Chicago, and I joined a company through an apprenticeship. So they don't exist anymore, but they were called Infinium. And they were kind of a market-making company, and it was very expensive to get in there. So for the first month or so, I want to say, they started teaching us about the profile. And it wasn't volume profile, it was the market profile. And they just gave you like the sheer basics of it, and then off you go, effectively. But you know, you did have, like, the way things usually worked in prop firms back in the day, you're kind of surrounded by people who have been there a little bit longer than you, but then you also had some people there who were like there for years. So you kind of learn from people around you, if that makes sense. You don't get an opportunity to do that now because everything's moved online, but that was where I was able to kind of ask people around me. And then we also had a risk manager who worked with Jim Dalton, who I was able to like ask things that I wasn't clear on. So that was like the first time that I even heard about profile anything, really. I didn't even know it was a concept. So that's, you know, the first time I was like, wow, you mean you can study distribution curves? Like, this is just amazing. And, you know, like anything, it's not a buy and sell signal. It's just a lens. Like, even when, for example, now I lost the trade, but you know, when you don't have situational awareness of what could be happening and why that particular trade might be still valid or invalid, that tends to put people on tilt. But the reason why a lot of profile traders that you see, why that never really happens with us, is because we can explain what is happening in real time. Like, for example, right now, I know that there is a value low up here. And I know that there's a good potential of us going into what I refer to as an asymmetrical neutral day, where you basically go into a neutral day, so you extended that initial balance both sides, but one side starts to extend more. You could also call it an extreme neutral day, I suppose. Like, it depends. Everybody's got their own name for it, because I don't think that Dalton ever coined that, but obviously in the recent times, and the more you work with commodities, the more you realize that there are conditions that are never explained in the original profile, because that was done on ES, not really on commodities. So all of us who have dealt with commodities had to like come up with our own names and own ways of reading the profile. So I'm aware of that, but at the same time, if we cannot hold above 4100, this is still a short for me. While we hold above 4100, it is also not a long for me. Why? Because I absolutely hate breakouts. Second, at any point, this could turn into excess, and then that same short idea that I had would still be correct. So I'm still leaning to a short, regardless of what. Like, you can't take a look at any single trade outcome and then attach emotions to it, because I see people do that a lot. They lose one trade and they're like, oh my god, I'm wrong, oh my god. The question after you lose a trade should not be, oh, I'm going in again, how do I get it back? It should be, is this actually still a valid hypothesis, or has my thesis completely broken? So for now, it's undecided for me, okay? Until I see what they want to do above this 4100, there's really nothing that I can do, right? However, copper, that's looking like it's arriving into an area that I might be interested in. If gold was doing the same and we were arriving into value area low all the way up at wherever this is, 41.34, let's say, I would be thinking more shorts, right? But not trying to long in the run up to it, no matter how much it may happen. I actually know that that's a lower probability option. And I would rather lose a neutral day fade than lose a breakout on a neutral day. Does that make sense? Because to me, this is a worse, jumping into a long would be an impulse, effectively. So not following the plan is how you get people in trouble, or not even having a plan by which to figure out what the day is actually trying to achieve. So that's why when you see traders who use profile, it's not a buy and sell thing. It's more like, this is what's happened, and you can explain it to yourself, and therefore your emotions just don't even ever get involved. But if you don't have that, then you're all over the place. You're like looking at the P&L and you're like, oh my God, I lost 300. How do I get it back? And I've seen people blow up entire accounts of like thousands and thousands of dollars because they were not willing to let one losing trade go. It's absolutely fascinating how that happens. So it's like, so you'd rather lose. We had one guy that lost like 70K on the day chasing a $1,000 loss that he suffered in the beginning of the day. It's like, why does it happen? It's incredible how minds can spin things the wrong way. No, I didn't work for Jim. No, I wish, Christ, no. But I worked with a risk guy who did work for Jim. And then since then, I've actually met many other people who were mentored or worked alongside either Jim or Peter Steidelmeier. So one of those is Hogue, right? Hogue knows Dalton very well. They go to lunch together and stuff. And even though Hogue still is kind of like fangirling over Dalton every time, as do we all, he used to work with him, like, you know. And then now you have Coach Paul from Top Step, right? He was mentored by Peter Steidelmeier. So again, all these people that I now know, they somehow have these like first line connections sort of to the founders of this amazing concept. So, you know, and obviously profile is one of those things, you either hate it or you love it. And you have a lot of people who are now new on the scene who are, you know, who are quick to tell you that pivot doesn't work. It's like, it's a situation, like, it's like saying price action doesn't work. It's like, what are you talking about? It's a situational awareness tool. It's like, how can it not work? It's just telling you whether the auction is strong, weak, whether they rejected a level, or whether the level was sustained. Like, there's no, like, how can it not work? It's like, what are you talking about? And the only thing I can think whenever somebody says something like that is that they don't actually know how to use it. That's where my mind immediately goes. It's like, you're talking about MGI. So it's like saying volume, it doesn't work. It's like, volume moves the market. Like, what are we, like, talking the same, like, how we, well, what's happening? I don't even know, yeah? So I've actually stopped arguing with people like that, and I think by now, all of these years later, nobody is really going to argue with me over that, because it's like, yeah, whatever, mate. And if they try, I can just bring out at least my prop balances, you know? And I've started to be a little bit more active on, what do you call it? On the Instagram. So I post little bits and pieces. Like, I took a payout from Apex last night again. Just waiting for some of these trader files to mature for another lot of payouts. BDJ says, hey D, I'm in a minus $1,200 balance on my 2XFA accounts. In total or both? So times 2 or in total? Because that's two different things. The drawdown seems unrecoverable. I'm dealing with self-doubt, and I'm just thinking I'm not cut out for this. Could use some encouragement. All right, let's talk about it. There is no trader in the world that hasn't gone through those same feelings, okay? And I will tell you a more recent story, right? So 2 years ago, 2024, when crude oil died on me, I couldn't fucking find a trade for the life of me that would do anything. I would literally go in, and then I would just watch it, do nothing. I would rather get stopped out 100 times over than be stuck in a trade that's not going anywhere. So let me ask you a couple of questions. What are you trading is number one. Number two, if you're trading NQ, ES equities, even MGC, are you open to trying something new? And trust me, everybody has doubts, okay? As soon as you get yourself into a drawdown, if you haven't been through that process many times over, and you don't have the coping skills, which are very difficult to develop, so this is something that's extremely tough. Being a trader, if you are not as emotionally resilient, naturally, that's something you have to develop. And to me, I'm so stubborn that I just don't give up. It's just not an option for me, okay? So when I was starting out, I was coming from the background of being a session musician, not very good at maths, but great at physics. So applied math, fine. Pure math and numbers, forget about it. Nearly failed the year, even though I had A's in everything else, right? But I was so deeply obsessed with music that maths was like totally not my thing. Only much later in my life, I discovered that I was actually incredibly good with statistics, bizarrely algebra, and even equations with one or two unknowns, which is like a big mathematical problem. But when I was a kid, that was all boring to me. I was like, yeah, whatever. So coming from that background where I was actually a successful session musician, to me announcing to my mom, I'm learning how to be a trader. And she laughed because she said to me, she's been trying to get me to go to be an economist. She wanted me not to go into music school and university. She wanted me to go and study economy. I said, over my dead body, I'm not doing that. Very bad, right? And look at me now. So my mom is, my mom was right, is right. However, to me, that sounded like the worst possible outcome. When I came to learn about trading, I got equally obsessed with it. But nobody around me believed that I could do it. Nobody. Why? Because they knew me. It's just like, you suck at maths. Like, really? You're going to be a trader? And I'm like, yes, I'm doing this. So I was very lucky to have a friend who was a trader who started teaching me how to do things right. Everyone starting now or in the last sort of 7 years, you have a huge disadvantage of learning from who? From YouTube influencers, who are, some of them are the biggest assholes that you can ever imagine, bar a couple of people who I respect endlessly, and they're my friends. But a lot of the biggest ones, they are pretty horrible individuals, right? So learning from people like that, they're not there to offer real value. They're there to create entertainment, and they're there to swear at people and call their chat gay, right? So now I know that I get a little bit mean to trolls, but if somebody has a genuine question, I will spend all of my energy trying to rectify whatever problem they have, because as an educator, that's what I do, right? And until you get to a point where you're very confident in what you're seeing through MGI, through market generated information, you will always have doubts. But then once you have some more robust coping techniques to figure out what's not going well and why, it's always going to be a matter of self-doubt. So, if you share a little bit more about me, then if you share a little bit more about where you are, like what do you trade, how long has this drawdown been going on, as well. That matters. So is this something that's just come up in the summer in July? So is it just 1 month, or is it like 6 months? Because if it's 6 months and you haven't been able to make any cash during all of this lovely volatility, then that points to a deeper issue. It points to a strategy issue. If it's just for the last sort of month or so, and if you trade equities, I would argue that that's just summer price action where a lot of the days will be range bound, and it's going to suck. So at that point, you have to move to something else. To what? That's another matter. You know, I probably wouldn't go straight to MGC, because MGC in my eyes these days is kind of like a version of NQ, and it irks me to no end. All right, let me just have a look at Bookmap here, because copper is kind of starting to turn around a bit. And you know, you always have, I know you say that you are saying, oh, I'm not cut out for that, but this is the beauty of today's prop. You can always start again and just say, listen, I retried it with these accounts. I ran into a difficult period. I'm just going to blow them and start again. That is something you can do. And it's not defeat. You have to look at it as a learning curve. It's like, okay, well, I tried it, gave it my all. Just don't do it through, like, you know, 2 days of drawdown. Or this is why I'm asking you, how big is this, how long has this drawdown been going on, right? That's a very important point. But if it's been going on for like a month, and you really just feel like you're not getting anywhere, just start again. Something that we never had the opportunity to do. Because starting again would mean a different firm and you getting your ass kicked on the way out of the office. That's how that went. You blow up and it was the end. But now you can try again. So that's why it's good. Markham Sky says, I've been obsessing about your Q points for the past week like crazy. The whole concept of cheap, expensive, and no diddle in the middle. You still use it, and how crucial it is. Positive. Hvala. First and foremost. Yeah, of course. I mean, I've removed them now here, but if you notice, there they are, Q points, right? So where have we come from if I were to just zoom out? Where are the nearest Q points? Well, here they are. Now, this is a relatively new swing. And sometimes if you have a strong-ish or an anomalous gamma level just ahead of them, they will bounce from it because the hedging pressure and the zones get wider and wider. Never mind, something for another time. But yeah, the zones are always there. The Q points are invaluable to me to figure out whether we are at a swing extreme or not. However, once we're away from them, that's when you have to rely on other things. If you're just looking to swing trade, you don't necessarily need to learn anything else more fancy, because trade location price plus price action at the location, that's all you need. And in fact, whenever I'm doing any kind of stock trading and stuff, I just use the supply and demand zones and Q points on the weekly time frame. And then once I want to enter it, I will look at how the price has behaved on a 4-hour Q point. And that's all. I want to see a rejection, touch, and a rejection from there. But yeah, Q points are still there. And these days, because we have so many people who have followed me on from Top Step, I have not talked about them, but they are, again, my concept that I came up with as kind of like a missing link between supply and demand and actually seeing whether you are at a swing extreme or not. And it's a super simplistic concept, even though some people think it's very like complicated or whatnot, and they get really hung up over the fact that I mentioned a pre-swing for the coders. It's nothing more than having a wave. Having waves rather than like consolidation, then like something shoots out of consolidation. That's a different thing. That's not a Q point necessarily. You have to have ebbs and flows in order to actually figure out whether it is a valid Q point or not. All right, I'm dropping down to a 15-minute time frame here, and I'm going to wait until this closes. Now, LME has gone by. So LME is closed about 10 minutes ago. And if you don't know about LME, LME is actually the exchange where copper mainly trades. So now if I can get a nice bearish engulfing here, this would be a bit of an extension of the neutral day, but it will be a fade, a neutral day fade. So kind of the same thing that I tried to do on gold. This one actually looks better and has a better trade location, so we'll see. And then on a lower time frame, we have almost the average session range exhaustion, but it is the summertime, so again, some reduction in those is not too dissimilar. So we have to wait. Now for these kind of reversals, we absolutely have to wait for a 15-minute time frame to close, because otherwise there's not enough trading information, and Bookmap is not really telling me that the delta is falling off massively here. So this will be a slower settlement fade if it happens. Alright, Senna is here. How's it going? Market Stokers is Apex allowing metals and energies. Yeah, they unrestricted everything, but just be careful because they bunged up the metals all into the same category. So you can't go long on copper and short on gold because they consider that all to be metals. So you will be done for hedging. But as long as you stick with that, you know, long on both, short on both, they're fine. Yeah. Yeah, I've taken a fair amount of payouts from Apex in the last month. I like the new dashboard, and the 50% consistency, I find it really easy. It's like not even I'm not even thinking about it. Alexander is saying, where else do we move to? The equities, especially NQ, requires insane amount of risk management. 100-point moves is the norm. What's a better instrument? Less volatile, but good money. Well, again, when it's moving, you have crude oil, which also has micros, and that can be very rewarding, but it's not an equity index. You can also try to go to YM, the Dow. You know, not many people trade the Dow, and yet to me it's much more of a sane instrument than NQ or ES, to be honest, right? And gold is, like I said, a bit crazy, but again, it's a commodity, so you would have to learn how to trade commodities. This is why I'm not in favor of people only pigeonholing themselves into NQ, because then you don't know how anything else moves. And we've seen it before. I've seen equities traders who try and trade commodities, and they get absolutely slaughtered. Why? Because commodities are not directional. They wag up and down like the horse drawers in a day, right? So it's like one day we're up, another day we're down, another day we're down. Like there's no discernible trend for most of the time. There are isolated years where we just have like a trend like we've seen in gold. But even that, once it turns around for like, you know, $50, $100. It's insanely volatile when it wants to jump off a cliff. So, and then intraday, there's the intercession behavior where if Asia does one thing, then London should do the opposite, and then COMEX does the opposite yet again. You also have to know which one of these metals to fade and which ones are more prone to trends. I wrote blog posts about that. You can go on marketstalkers.co.uk and read the blogs, right? There's a lot of information in there. So use the resources that I provide you for free. You don't even have to sign up for anything. But, you know, right now we are creating this trader education network that you might want to check out. And it's going to be quite a few people talking about various specialties. So it's not just Market Stalkers. There's like a whole bunch of stuff. Because Market Stalkers, you know, that's my PDP, Pro Development Program, and the foundations. And it's a pre-recorded on-demand kind of async lectures whenever you want them. But if you want something more interactive, then this is where any kind of trader education network can come into consideration, right? And that's going to start 3rd of August. So I'm not going to talk too much about it because we're trying to keep it exclusive. But some people know about it now. Yeah. All right, let's have a look at BDJ. They're 50K accounts and I trade mainly MGC and MCL. Okay, it's been over the last month since I worked my butt off to earn the accounts. It's shaken my confidence quite a bit. Yep, understandably, I'm so sorry to hear that. Going to step away for a week, I think, review concepts and setups. When I get back, size down and slowly dig my way out. I've done it before in an eval, and that one I passed. Yeah, so I would say... I don't know where you are in the world, but if you can trade Asia, or London, they have been much smoother for both, not London for gold, Asia is gold, but crude oil has been beautiful during London. And there's just one thing that London does to crude oil. It reverses whatever Asia's done. On like 70% of the days. Obviously, there are days when they just kind of carry on, but that's the outlier. That's not the same thing. So, yeah. I would stick away from MGC. Because MGC, I'm going to tell you, it annoys the hell out of me. It's gotten, like I said, it's gotten that NQ-ish kind of feel to it. And I prefer to let the bots do whatever. If I get involved with MGC like I did now, like you see, it hasn't moved anywhere, right? So I tried a short, it shook me out, and now it's just standing there. It's like, what the fuck are you waiting for? You know, it's like, well, what's going on with gold? And it's nothing. It's in a rollover. It gets weird. It dries down to nothing sometimes. But at the same time, it's still volatile. It still has that, like, seizure-inducing movement intra-candle, which I really dislike. If you are with Top Step, you can do micro copper, which is actually a really rewarding product. Mainly a fade. So yes, there will be times when it does this, but then you go into a short and then it rewards you. So again, I'm about to try. I'm going to leave the 75 because I've got 1.2k in there. But maybe we can do 610 this time around. I just need to see some commitment to the downside, which may not happen for another 45 minutes into COMEX settlement. But again, I am on the stream right now, and we do have a bit of a non-committal 15-minute bar. I did want to see Delta shaving off a bit more before I enter. So again, I'm probably not the most dynamic streamer because my trades last between like 2 to 4 hours. And a lot of the times I just come here to do more of a recap, I suppose. Maybe we should be doing that. But yeah, let's try a short. Let's see if we can grab a little bit more cash here from our friend Copper. So Copper to me, as long as the CBOL, again, go to my marketstalkers.co.uk blog and there is a Copper blog in there. Let me see if I can find you the link. Because it tells you everything you need to know about copper, right? I'm gonna grab a link. There we go. Habibi says Dow Jones and DAX, most profitable instrument for me. You mentioned CFDs. It doesn't matter. Like CFDs are just like partly regulated products that are similar to futures, but the reason why we don't do them here is because they're partly regulated. And if you're going to hold more than 50k in any one of the accounts, CFDs in the UK are only protected up to 50k of your money. So that's not great for me. But yeah, have a read on copper, whoever's interested, because it is slower. So if you come from trading gold or something, don't expect that it's going to be this like crazy product that you enter and immediately you see the movement. You have to be patient with it. But the good news about copper is that it's so mechanical in the way it moves. So if you are coming from the market stalkers method, you know that I use time of day, very specific times of day, to fade moves. And there's a reason for it. Commodities love times of day, very particular times of day. What's up, Seven? I'm choking. Vital's asking me, have I done Lucid Prop? No, because they don't allow automated trading. So that means that I personally am limited to the ones that allow robots. And that openly is Tradeify, Apex, Trade Day, and TopStep. TopStep have their own API. Unfortunately, every time I was with TopStep and I've worked for them as a contractor for such a long time, they push me into a live account where there's no bots. And I struggle with that because a lot of the trading that I do is Asia-based. And I want to sleep. You know, that's the reason why I developed bots back like 10, 12 years ago, right? So that I don't have to stay awake through Asia. And I kind of felt like being there made me go backwards in my career. It's weird. And then I spent 7, 8 months trying to create the bots in their API, only to get pushed into a live account and find out that the API doesn't work in live. So much for that. So yeah, there was like, you know, a couple of things that was a little bit tricky over there. Yeah. Will I be trading single stock futures? No. Because I personally have a portfolio of longer time frame futures. And again, I have to mention, I'm a commodities trader. I do not want to go back to equities. Like, why would I trade equities all of a sudden just because they're single stock futures? I can talk about them, but, you know, the only way I get involved in single stock futures would be maybe through some options, but it's not going to be through this, right? Definitely not through this. So it's not going to be intraday. It's not going to be me looking at profiles in MGI. It's just going to be maybe another vehicle to perhaps generate some premium cash if they are chopping and doing nothing. Now, obviously, the earnings season coming up in August, so that's not happening, and I'm certainly not touching them. They are very interesting, and I think a lot of people might be tempted to trade them. But me as a commodities trader, I was never tempted by single stocks anyways, right? So single stocks for me are vehicles for long-term investment, not for generating income day to day. For me, commodities is where my heart lives, where my specialty lives, and there's no need to change that, personally. Yeah, Senna, totally agree with you, man. Yeah, I agree. I think it was not necessary. They could have just let everybody stay on Ninja. Like, what was the problem with C#, you know? And suddenly going to TradingView and some weird API that they're, it's like, it's so unnecessary. Like, so many resources just wasted that could have gone elsewhere, right? Kelly says, hi, D. Hello, everyone. Hello, hello. BDJ says, thanks, D. I'm in North Carolina, so I typically trade the New York session. If I'm working from home, I think the Asia session will be better for me since I can give it my full attention. Okay, so for the Asia session, then try and focus on pre-Tokyo range and either breaks or exhaustions in and around the extremes of the same. Profiles don't work as well for Asia, but once you do get the movement, it's very smooth. Like, whatever it's doing, it's much smoother than New York. I've actually stopped trading the majority of my positions in New York, and most of my trading is already finished by the time London opens. Okay? So me being here is more like, oh, courtesy of maybe doing a couple of trades just to keep, you know, in touch with everyone and whatever. But it's not really, because of all the tape bombs that we've been having, because of the random pieces of news. Honestly, if I stayed trading just a New York session, I would probably be in a drawdown as well, if I'm going to be honest. Because, you know, you try and catch something, and then one piece of news, and it's almost like they're doing nothing until the point that there's some news, and then there's a tank bomb, and you either survive it or you get smacked on the face, and then back to nothing. So that sort of price action is not very conducive for anybody's strategy, whether you're a range trader, whether you're a momentum trader, whether you're a mean reversion trader. It doesn't matter. It's just not good market conditions, because you'd have to like have a crystal ball to actually capture any of the tape bombs. So unless you're already in a trade, maybe you can, you know, be like kiss the ground you walk on and go, okay, great. But nobody wants to trade like that, right? Like you want to trade with a strategy. You don't want to trade with, you know, praying to a non-specific deity to make trading work. It's stupid. So yeah, that's why I went to Asia. That's why I went to, you know, very late Shanghai, the handoff between Shanghai and London. Beautiful, beautiful setups. And I literally do, I don't know, 90% of my trading now is like Asia and London, done. So yeah, try Asia, pre-Tokyo range as a reference. See how you get on, you know. There certainly needs to be a learning curve, because obviously whatever you're doing now is not working. But that's also not the opportunity to grow, right? So don't look at it as a negative thing. Just go, okay, we ran into a challenge. This is like a roadblock. Take it like a video game, right? How do we find a way around? You're playing a video game. There's a big river and there's no bridge. So you need to build a bridge to get to the other side. Same thing. Any thoughts on how the changes in China for gold has or may affect the evening market trade time? Not much. Honestly, China has always been known by, you know, trading gold a lot. That's not really going to change with any kind of hours being longer or shorter or opening up to more people. If anything, it's going to have a little bit more liquidity. But I'm actually seeing that we're already so speculative in that product that it's like, is it really going to make that much of a difference? I really don't think so. So yeah. Senna says, yeah, tend to use Rhythmic because it gives me what I need to implement order flow in code directly from MBO stream. I haven't seen anything else that exposes raw data to the API, so I can do the order flow. Quant Connect do have an MCP now, so that's what I've been using. And it's pretty decent. But obviously Quant Connect comes with its own quirks, so I don't know whether you've ever used it, but it's kind of like, it depends what you want to use. If you want to just use like C#, then it's fine. But they have another version where it's almost like Python, C#, but in a Python wrapper. So you have access to all the libraries. Anyways, we're going to lose people now. So I'm going to shut up about coding. So yeah. All right, I'm starting to melt in this office because we have another heat wave on the way. So I'm going to finish it here. I'm going to leave this trade to do whatever it needs to do. And like I said, we may not get the move until we get closer to settlement or for COMEX, which is coming up in another half an hour. But I can't sit here because I'm going to be like literally completely drenched in sweat because I'm like so hot and the air conditioning has run out. After about a couple of hours. So that's going to be all for me. I'm going to probably be streaming around about this time. This is a more natural time for me to try and find some trades that I'm generally pretty comfortable with. So we're going to be carrying on with the London close setups, and maybe I will take August off as well, because that, you know, I generally, before I started working with TopStep 3 years ago, I used to actually take the entirety of the August off and then halfway through December. So I really don't see the reason why I should, you know, be continuing to stream. However, do check out a website called The Auction Stack. I'm going to put it in chat, because that is probably where I'm going to be living. That didn't put a link. All right, there's a link there now. because that one's not going to be on video. It is going to be just like yapping and lectures and daily classes and stuff. So check that out. It's something that we've been kind of keeping quiet and building in the background. But yeah, so it should become operational on 3rd of August. And I think it's going to be a good space for people to hang out and to keep pushing on their journeys to get better every day. That's going to be all from me for today. Thank you so much for sharing your time with me. Like I said, I'm going to keep this copper going for as long as it needs to be. If it ever gets to even like 45 ticks in profit, I'm actually just going to take that and finish my day. We started the day 2.5 grand up, right? And then that copper trade on multiple accounts brought us to 6K. So we lost a little MGC trade, but now we'll see whether copper comes to push us into a little bit more cash for the day. But even if that one loses, we're still walking away about 5.2, because if this one loses, it's going to be probably about 600 or something. But yeah, not a bad day on a Tuesday, and hopefully we can take a couple more payouts this week and get some nice biscuits for the doggos. This was the Metal Markets. I'm Marcus Stoker D. Thank you for being here. I will see you again on Thursday at 10:30 a.m. Eastern Time, and that's 3:30 p.m. UK time. That's all for me. Take care.